So much in the last week, I can't believe that it's only been a week. So last weekend, we heard about this peace deal, and rates opened up Monday at the best levels that we've seen since early June. It touched the best levels that we've had in the last 30 days, and that is some good positive news. As more comes out with this peace deal on the war that's not a war, who knows? Quite honestly, it doesn't look that good for the U.S., but story for a different day. We'll see. I mean, it came out, and then they're like, well, if we don't like it, we're going to bomb them anyway. I mean, it's a very loose framework. There's almost no details. Your guess is as good as my dog's inside, probably, because nobody knows what's going to happen. In other news, we had the first Fed meeting with our new chair, Kevin Warsh, leading the Fed. And a couple of different things. He reduced the Fed statement, which is usually like 300 words, down to 100 words. He did not put his dot on the dot plot map. Now, this dot plot map is basically, well, it's like a weatherman. It's got a chance of being right, but really usually isn't. And so Kevin said he didn't want to put a dot on the map because he feels like doing that telegraphs too much what the Fed is going to do. And if they need to change course, it doesn't allow them to because they've already telegraphed what they're going to do. Can't argue with his reasoning there at all. So he left his off the map. But everybody else put their dot plot on the map. And very interestingly, it looks way more like we're going to have an interest rate hike this year than an interest rate drop. Now, before you hear that and like all doom and gloom, if the Fed hiked short-term interest rates, now it's not good for our credit cards. It's not good for our home equity lines of credit. Those, if they hike it a quarter, those go up a quarter point. But if they hiked rates, mortgage rates are going to go down. If they cut rates, I am certain mortgage rates are going to go up because it would spur inflation, and inflation is the arch enemy of long-term fixed rate instruments, and that is bad. So, very interesting meeting. Very interesting, especially because Kevin Warsh was appointed by our president, who has basically commanded the Fed to cut rates, and everybody in there said, we're going to hold the rate steady, but we're leaning more towards a hike. Next week, we got personal consumption and expenditures. Now that we have a framework of some peace thing in place, we got to go back to trading on news. So it'll be interesting to see how the PCE turns out. It was at one point the Fed's favorite gauge of inflation. We'll see how this iteration of the Fed is going to think about it. But I know the markets will react to any outsized moves up or down in that. I'm Sean Zalmanoff. I'm here to make your life better. Sometimes more simple, but I'm just here really to help you because the world's an awesome place, even with all this crap going on in it. And that's what I got for you. If you need me, holler. Peace out.